Alright everyone, welcome. Today we're doing a super quick rundown of the latest Q3 earnings reports from two interesting companies, Campbell's Soup and SAIC. Let's get right into the key numbers and what they mean. First up, Campbell's, their net sales came in at $2.48 billion, that's up 4% year over year, which was a beat on expectations. Good start there. However, adjusted EPS, earnings per share, was 73 cents. This was actually a beat compared to the 65 cents expected, which is a positive correction from perhaps earlier script notes. It is, however, down 3% year over year. The winner for them was clearly meals and beverages. This segment saw a 7% volume increase. It seems consumers are still leaning into cooking at home. The loser, unfortunately, was the snacks division. Volume here was down 5%. We're talking about brands like Kettle Chips and Goldfish struggling a bit. For their fiscal year 25, Campbell's is guiding their EPS to the low end of the $2.95 to $3.05 range. A key thing they highlighted, tariffs could potentially hit them for about $0.05 per share. So, that's a warning sign. It's worth noting their stock has had a tough run, down about 19% year to date. Now let's switch gears to SAIC. This is Science Applications International Corporation. Their revenue was $1.84 billion, which is up 6% year over year. That's a solid beat. And here's a big one. Adjusted EPS hit $2.57. That's a massive 80% increase year over year. They absolutely crushed it on earnings. This $2.57 figure is a key correction, much better than any previous estimates might have suggested. They are a cash king right now. Free cash flow surged an incredible 143% to $236 million. This is a major positive and a critical correction from any prior erroneous negative figures. A big catalyst for them. They've secured a new $1.8 billion Pentagon contract. That's a significant win. There is a red flag to keep an eye on. Their book-to-bill ratio is currently at 0.7. Generally, a ratio below 1.0 can suggest a future risk in replacing backlog as projects are completed. The stock has seen some positive movement, up about 3.4% year to date. So to wrap this all up with a quick take, where do we lean, bullish or bearish after these earnings? On Campbell's? Right now, the sentiment feels a bit more bearish, or at least cautiously neutral. Why? While the sales and EPS numbers had some beats, the struggling snacks division is a real drag. The guidance being at the low end, coupled with those tariff concerns and the stock's year-to-date performance, suggests there are significant headwinds. They need to turn that snacks segment around and hope for some external relief on tariffs. On SAIC. For SAIC, the outlook appears more bullish. Why? They absolutely crushed their EPS. Revenue growth is solid, and that surge in free cash flow is very impressive. The new $1.8 billion Pentagon contract is a massive win, and their large bid backlog points to strong future potential. While the book-to-bill ratio is something to monitor, the current momentum and catalysts are definitely leaning positive.